Hello guys, glad to have you on board again. Today we're gonna make a quick recap about the Bitcoin and other cryptocurrencies. I'm not talking about other cryptocurrencies for quite a little while, simply because everyone is basically following the same path. So analyzing what happens with Bitcoins just give us the broad-based scenario to follow with other cryptocurrencies. I still stand to believe that some consolidations are coming forward. The Bitcoin will probably be the leader, and then eventually an altcoin season will show up in a second time. So if you think that some cryptos will go higher, and I still tend to believe Ethereum is one of them, and I still tend to believe they will reach out to 400 and stuff like that. Ripples as well has some bullish potentials. So major altcoins have opportunities to go higher, but I don't think they will be doing this just right now. I think both will need, all of them will need to consolidate first, and then in a second run we're going to have the alt season, pretty much a replicate of what happened early 2018. But still, until then we've got lots of other stuff to talk about, so just bear in mind this underlying scenario. Keep that in the background of your head and just trade what happens right now. For now the market is moving up. We do have some structures to follow to anticipate the market, so we're just going to apply those structures to this market. So remember what we have. We've got a nice fuckable cluster we got in here, in which we've got bubbles, so crazy bullish movements on H1 time frame and 4-hour chart time frame. The 1 hour is stupid, the 4 hour is pretty much mature, and the daily is resistant. So those two are trying to get through this one. The question is, will they do it or will they fail? I tend to believe the fact that the 4-hour chart seems to be maturing, I'll tend to believe we're going to resist, and we're going to go in the opposite direction first, and we're probably going to cause a speculative crash regarding the parabolic scheme moves we've had to rise up here. So that's the question. I don't have the answer. I just need to have decent risk management to trade that. So what did we have as new signals to risk manage in between? I goddamn don't know. All right, so it is really hard to figure this out. So let's try to do something with it. All right, new signals. We've had a 4-hour divergent, but the divergence isn't really that strong. So I would pretty much say we'll pull backing at the moment. So it's hard to say if this is something to trade or not. It is a tradable signal, definitely is. So if it were about to break out the previous support, then I would say yes, we probably cut the market top. We reversed right into the expected resistance area. We do have signals to trade. I missed those signals, so I'm not going to catch up on the late trade. But I would stay to believe, no, what we have in here pretty much looks like a range, all right, kind of the range we had in here before a final burst shows up. So I expect ranging and probably a final push. That's what I expect. That doesn't mean this is what's going to happen. All I'm saying is that in a shorter perspective, like 1 hour, we do need to have range signals. I don't see them. So from what I can see right now, we need some range structures in here, and I would pretty much try to get the next bullish breakout that would probably give us a target near this area, and if that's this one, that I'll be ready to trade. So I'm kind of waiting for further information. We do have a squeezing structure in the H1 time frame, which is exactly supporting what I think. The level of uncertainty in here is pretty fucking high, and who knows what the fuck is going to come out of here. I personally don't know. This is the problem. Squeezing structure basically says we might break out rather sooner than later. We're in context, which means double danger in here, and it is hard to say. All right, the movement is parabolically stupidly bullish, so breaking one more time to the upside, kind of a final excess. Yes, I think that's very likely going to happen. Are we just going to fuck up this by just shorting in here and wrong-footing all the bulls? I wouldn't necessarily be surprised at all. So I can't tell. It's a squeeze. I've got nothing to basically orientate this scenario, whether to the upside or to the downside. It's pretty much a fucking 50-50 game. So what do you do with it? Do you actually need to anticipate something that is barely a black or white situation? No, I don't. So I'm just going to let it go. If it goes down, I'll probably take the breakdown trade. because I want to be selling this market, but if it breaks up, I'm going to have better prices. So why the fuck would I just sell right now? There's not even a range structure in here. So there is a range in the 15-minute. We can definitely see it. And some experienced trader in the French section of the Discord has been taking this resistant trade yesterday, who's been profit taken right on the expected target this morning. But that's it. I mean, despite this trade, I don't nearly even see anything else to be done in this range. The range was pretty much perfectly traded by the guys. All right, so two boundaries. They traded the third one. Nice signals, taking profit right into the expected area. So there was definitely a low-risk trade in here, secured and profit taken in here. So, all right, that was easy. At some point, that was easy. The thing is, as this trade has been done, we do have a range. The range is now mature, so who knows what the fuck is going to happen. As we said, 1 hour is squeezing, so we can very well fuck up this range to the downside or surge to the upside. It's hard to say. We don't even have any clue in here to risk manage. We don't have any diamond to tell us, all right, probably we're bearishly oriented in this range or we're bullishly oriented. We got absolutely no information to risk manage. So what do we do with it? We just do nothing. That's all I have to say. There's nothing to do with the Bitcoin in the next 48 hours, in the next 24 hours, because who knows where the fuck are we gonna break through? Maybe higher, maybe lower. Both make sense. Both will trigger something. Both will mean something. But still, who knows what will be done? I don't. You don't. So I tend to say, anticipation needs to be done when anticipation contexts are reached out to, when risk limitation is decently done. In here, none of them is viable. We know where the demand area is for sellers, we know where the demand area is for buyers, we're right in between, and we've got not a fucking clue about which one is the most favorable one to forecast. So, nothing to do. Moving on is all you have to do right now. Doing the SPX. So first we start the SPX on a daily review. You do use the caching structure to see if we do have underlying gap nearby. No, we don't. We still have this one pretty much open over our heads, which gets closed at 29.32. Obviously the market would like to close this one, because as long as we keep this one opened, Wall Street is under big danger of a nice and violent bearish reaction. So they really would like to close this, hopefully before the Fed, because if the Fed just fucks it up and we go below this and we were about to reverse, that means, oh man, we did have triple tops out of historical highs. That's not good. All right, so that's exactly what the topic is right now. Wall Street's doing anything they can to close this gap, because that's the bears kind of holding on structures. If they get to fuck it up, the bears are probably out the table. If they don't, then the bears are gaining strength, and that's exactly what they don't want to happen. So it is dangerous. Is it going to happen today? I goddamn don't know. So we're gonna just split that, sit that aside. We don't care about swing trades, all right? So we don't try to think swing. We're just gonna do intraday trades. Just be aware that as we do this, all right, as we're just gonna reject every intraday, every swing behaviors in this analysis, as we should, because let's be honest, we're trading a swing area. We've got a major swing event tomorrow, so it's definitely about swing. But normally you shouldn't focus on that. So there is two options. Either you assess this risk, you know that there is a big swing risk and that you shouldn't even get your fingers down this dangerous system out there in intraday today. You just say, all right, you know what, tomorrow is a big day, so I'm taking a day off today. Fuck up, I cannot do anything in intraday. That's definitely the best choice, all right? So let's stand for this. You know something big is going to happen tomorrow. You don't know a goddamn shit about what's going to be said, how the market will take that information, how prices will react. So there's nothing you can exploit. So you don't have any fucking edge or any advantage. You cannot even anticipate. You don't have any risk management. So is that trading? No, it isn't. So normally the actual conclusion you should get down to in this current context is I cannot do intraday trades. Point. Period. You move on. We're still going to do it like a practical example of how you should do intraday trades if there wasn't the Fed coming along tomorrow. So daily charts, you assess the risk and take the risk areas, all right? You figured out that if we get there, the bears are probably off the table, but still there are resistance areas. If we get to bearishly resist and sell this area, then hopefully the bulls will be wrong-footed and the bears will be able to risk manage, and that's it. All right, so what you do is you go 1 hour chart time frame, you do your usual job, you have a look at what the framework system gives you as reliable informations, and you take your fucking trades if something shows up. So what do you have in a 1 hour chart? Does that look like something you already know? Oh my goodness, I'm gonna need to do something with this shit. I don't know what the hell happened. It's a pretty annoying bug. Come on. What the fuck? Alright. I need to take this one down. But I can't really do it. Oh, see. I did. Alright. So, what does that look like? It looks like pretty fucking noise. You've got nothing interesting to do. So, same old story. You go to the upper time frame. Sorry about that. So 4 hour context is where you can definitely figure something out. It looks like a range because stupid trend, so absolutely no trend. We tried a bearish trend, we failed. We tried a bullish trend, we failed. So what does that mean? It's a goddamn range. So we do trade the 4 hour range as for now this is what we have, and we can definitely contextualize this one. Right, so what do we have? A mature range, first boundary, second boundary, and we're about to make the third one. All right, so we need to be at least in context. We're reaching out 76% fib, so we're definitely, we can check the Fibonacci steps needed to be taking a range trade, but we at least need to be in context. So experienced trader will trade in context. Beginners, you should wait for context extraction. So beginners shouldn't even trade now. That's the actual conclusion. You're an intraday trader, you're a beginner. Get the fuck out. Multiple reasons. The Fed gets you out. So that's what we said, all right? The swing context means you cannot even intraday trades. But still, if you could trade, I mean, the Fed wasn't going to be there tomorrow, then even without the Fed, you shouldn't even trade if you're a beginner because the conditions are not yet met. And therefore it's a 4 hour chart, so you knew that today nothing must be done because you have no context. So you can still trade short term, but without a context. So you have no limits on those trades, therefore you don't know what to actually do. You cannot favor buying or selling, meaning you will be able to do both of them, but you'll have to risk limit. So you're going to have to take tinier position sizing. That's the conclusion you should get down to. You've got no context. You're not favoring sellings or buyings. So what you're going to be doing is your 15-minute chart context, if you can figure out a context in here, is going to be your system. Right? It's going to be what you trade, but you're going to take tiny position sizing because you don't have an overall plan. You don't have a context to trade. So you're trading the 15-minute context, and as you can see, for now it's been working just fine. You're trading stupid volatility. Right? You're trading this stupid range. It isn't yet mature, or sorry, it is mature now. All right, so first boundary, second, third, and third. All right, 2 contacts in here, and this one. So these ones are just one. So what do we have? It's a 4 contact range. We'll maybe eventually doing the 5th one. This range pretty much looks like nothing, as in here you've got 2 resistance contraction, all right, so the lower highs, and we've got higher lows as well. So what the hell is that? Then no one has the answer. It could be a triangle, but still we already broke this triangle. So it is an ugly range structure. What does that look like? I don't know. All right, sorry once again. So what does this look like? It is hard to say. We do have something in here, absolutely no catalysts. So it's pretty much like the euro area I've been deciding to buy this morning. We're not yet into the selling area. We could be selling context. We do have range signals. So we've got some noise. That's all I can tell. It's not technical. So that's one more layer of market reading that just gives us to the actual same old conclusion. There's not a goddamn shit to do today in the SPX. Neither in swing, neither in intraday, neither because the Fed is showing up tomorrow. So the actual conclusion is, I don't know what you like to do in life. Like if you like painting, if you like anything, like some sports, I mean, if you like biking, you like whatever the fuck, just do this instead of trading, because there's not a goddamn fuck in trade to take out of this. So move on, do something else, learn that trading sometimes doesn't bring you anything to do because there's not enough risk limitation to do it. So move the fuck out. Enjoy life. That's more important. So there's still something to do, but we're going to have to do something else than trading this asset, because this asset, no matter how angled you try to get to approach this market, it always gives you the same conclusion. There's not a fucking shit to do. So moving out of this, the only other solution you can have to is to go another layer of intraday trades. And the best way to do it is to use this multi-chart setup we had back in the day. So as we figured out, just look at this. I mean, just to me, it is stunning to see what happens. You can see that this asset, what the hell is that? The FTSE is breaking up, all right? But look at the others. DAX, breakout target, range target, range target, range target, range target. So all the indices are giving you the same signal in the same time. It just tells you, all right, you know what? Might be a breakout, but definitely looks like a range. So what is going to happen? We're probably going to reverse in here. So if you want to take an aggressive selling entry in here, you know it's risky because Fed, whatever, always said. But you can see that everyone in this context is giving the actual selling signal. It's not a selling signal, but it's a range signal. The market is trying to break the range. So that doesn't even fit the plan. You're not going to get range breakouts when the market is trying to trend breakouts. So it looks like we might be early doing something, but nothing suggests it's going to happen. Everything suggests we're just trying. We're going to fail because that's what we're going to do. We're just going to go back to the range. Seems to be the most probable structure in here. Still, we've got no signal, so you need to wait for a momentum signal to confirm that. And moreover, you're going to need to wait for a red triangle on all those assets. So I would say there is an early, active, interesting area on all those assets, but it needs some price confirmation to limit the risk. So wait for this signal to trigger. If there is red triangle showing up on those assets, you can take those trades. That doesn't mean it will happen. It's very dangerous. The range are mature. The range are not even technical. They look like stupid stuff. All right, that look like a triangle on the SPX. All right, so it doesn't behave normally. The reason is simple. No one is trading, low volume, no one in the order books. So we trade stupid because that's all the market can do. It will try to push you to take some irrational trades, going to give you signals that you would like to trade, but definitely the best case scenario to do nothing. But having a look at the intraday charts, I'll see something that is interesting though. The euro-dollar is giving us some reliable information. All right, the euro-dollar is breaking out of context, so we're going to have a look at this one. All right, that's what we have. I'm going to go back to this chart, taking the euro-dollar. So this one as well impacted by the Fed. Definitely is. All right, don't take it any different. All right, the Fed is going to be the game changer in this matter. But still, there's something you can do in here. All right. Once again, the goal is to figure out a goddamn context to trade. And I would say, yes, 1 hour is giving us pretty reliable informations. So what are those informations we do have? All right, this really is interesting some way. All right, looks like a trending move. All right, breakout, pull back, and final excess. We do have bullish range structures, so we retraced 61% is there, 76% is there. We're below context, so there is definitely something to do with it. Right, there's definitely something to do here. So what do? Trend retracement. You've got multiple options. The first one that rings a bell to me is fixed goddamn range. You take bottom to top. All right, I should go up all the way up, remember? But the thing is that we already retraced all the upward area, so there's not even an interesting thing to do in here. So what I care is this area, the one we're trading right now. Oh, magical! What the hell are we doing? Just look at this price. Oh, that's the latest time we've built a bottom. How weird that is. So once again, this is very aggressive. You shouldn't take trades without signals. But still, those volume areas, they're areas of matter. All right, so the euro dollar, if this was a bullish trend, and I tend to believe it was, then this is just a pullback that we're probably going to buy, and therefore there is a really, really attractive signal to take in here. We're right into the expected Fibonacci area, 61 to 76. Beginners cannot even trade unless we go 1.1172. Right, so this is the price that the beginners may start buying if we get up there, if we get down there. Anything else is just for professionals. All right, let's be honest. I'll tell you, I already took a trade on this one, 1184, and I'll take the next one in there. All right, I have a stop loss in there. It's a very tight stop loss, but I think we're just getting there before the Fed. This doesn't even nearly look like a breakout. All right, once again, doesn't nearly fit the breakout scenario. So this is an alert, all right, for potential breakouts, but doesn't nearly even going to be one. So at the moment, I'll say, all right, there's a buying entry to do. Early buying entry, highly speculative, obviously on it's before the Fed, so very dangerous. Don't go leveraged on this, all right? Just, I think there is a reinforcement. The stop loss is pretty fucking cheap. The stop loss costs 0.25% approximately. So I would say risking 0.5% on this trade just brings you a leverage 2 on the account sizing, which means anything that goes positive afterwards is going to be doubled on your account. So how am I going to handle this thing? I'm going to tell you it's pretty simple, right? I'm buying this area. Anytime we make a tiny pullback, I pay for the stop loss and then fuck that. That's simple as that, right? So any rebounds I have, first thing I do, paying for my stop loss and then moving on. That's really how I'm going to do this stuff. So I'm going in there, 0.5% risk. If I get stopped out, I'm not going to cry out. If this works, I'm going to rapidly be secured and paid for my stop loss, and the rest is none of what I care about. I'll play the Fed with this. If the Fed takes down my stop loss, it costs me nothing. If the Fed reverses the market and brings the euro dollar into the bullish trend, then I'll take some nice pile of cash. That's how it works, all right? Limited amount of risks, big bullish potential afterwards. If it works fine, I'll be happy. If it doesn't work, it's not going to cost me that much, all right? So 3 options. If it breaks down those levels, straight line, we're in a bearish trend, I'm going to be fucked up, it's going to cost me 0.5%. How big of a deal this is, to me, really, it is nothing I care about. If it works out, I'm going to rapidly be secured. All right, just I think we're going to rebound in this area. I'm probably going to be able to risk manage, and if that happens, no risk at all, no risk of losses. And if it works fine, big gains. That's the kind of scenarios I like. Like I said, for now we're aggressively bearish, so I'm definitely buying a goddamn falling knife. I'm aware of that, but I do use securities, which are volume-based informations. All right. So I can tell you something, this is because of the Fed, all right? So we're anticipating the Fed. Speculative traders are asking for those prices because this is where speculation must be done. So this is brutal. This is only for professional. There's not nearly even a bullish signal in this area. So what do? You do nothing. Let's be clear. You cannot even trade this if you're a beginner. First of all, this is the price you need. So as a beginner, you should nearly even take the trade in here. You wait at least for this one. If you want to take this one blindly like I did, that's your own responsibility. All right? I think we're going to get to this price. I definitely think we will. I don't know for sure. All right? You want to take this price blindly? You want to play like the big guys? Yes, do it. I mean, you can. But be aware about risk management, be aware that there is a Fed. So if you do any different than like I did, like 0.5% risk, very tiny amounts of risk in there, you're just doing it freakingly stupid. If you just take a very aggressive trade and you put some greed on top of this, like, all right, I feel it's good, so I'm going to follow the guy, but you know what, I don't want to make pennies, so I'm going to triple or quarter or 4 times the amount it's been spending in the year. Like a 2% risk isn't that big. If you take 2% risk, you just took 4 times the risk I take, and I'm a risky trader, so I'm already taking quite a significant amount of risk by risking 0.5% there. Right? So if you take 4 times more risk than I do, then you're just stupid as hell. That's not how it works. Right? So if you even follow me blindly, first of all, I hate that. You shouldn't even nearly do that. But if you still want to do it, I can't prevent you from pressing the goddamn buttons. You see, if you at least press them just respect the goddamn risk management. That's absolutely necessary, because some of you guys here and there are just trying to follow blindly and you do it stupidly. So if you follow, first of all, you're not going to learn any fucking thing, because if you take a trade because I told you I took a trade, you're trading because I traded. So you're not even trading on your own. You're just copying someone else. You should be understanding why I'm doing this. I'm not doing this to tell you to do this. I'm just doing this for you to understand how the fuck this works in a trader's mind. So I'm sharing you my trades so you get to how I took the trade, why, how do I risk manage it. Not, all right, he's taking a trade, I have to make the same. No way. You're not learning anything if you think it that way. Not at all. All right. So anyway, I think that's it for today. I think Eurodollar is the only safe trade to take. At least when I say safe, I say risk limited. That's all I can tell. There's definitely a stop loss. I don't know the future, and you know how dangerous this area is. You know how dangerous the Fed will be. It's just if you take those aggressive trades, secure them pretty fucking fast, and once they're secured, you don't nearly give a shit about what's going to be said, done, whatever. All right. You pay for your stop loss, and then you move on. Either it's going to work fine or it's going to take down your stop loss. It's a binary choice, but if it goes wrong, no loss. If it's right, gain. Bye guys, see you tomorrow. Oh, and by the way, so the AMP account has been opened, but it's going to take, I think, more than the time I have to make it funded. So I just sent my funds yesterday. I don't even think they'll be there until tomorrow. So if magically they're there, I'll be able to make the third scalping strategy video tomorrow, but sincerely I doubt that. Eventually on Thursday, that's not a guarantee anymore. So as long as the funds show up in the account and I'll be able to have access to the order book, I'll do the show almost certainly. All right, so it doesn't depend on me, so I'll tell you whenever this gets ready. Otherwise we'll do it next week. No worries, we'll do it anyway. It's just a matter of time.